here, folks. We are live and share.
As the clock strikes 7, the vibes alive. Inner circles here, where voices thrive. Turn on your screens, let the magic unfold. Listening and healing as stories are told. Come one, come all, this is your time. No topics too tough, just heed the call. From mental health woes to justice we seek. Together we rise for the strong and the meek. A safe space for all, let's lift every voice. Inner Circle podcast where hearts unite. Sharing our truths, bringing hope to the light. Community strong, we're never alone. Together as one, we've created a home. With laughter and love, we break down the walls. No topics too tough, just heed the call. From mental health woes to justice we seek. Together we rise for the strong and the meek. A safe space for all, let's lift every voice. So join the conversation, let's set the tone. Inner Circle podcast where love is well known.
Good evening, everyone, and welcome to another episode of the Inner Circle podcast, where we bring you important topics that impact our community. I'm your host, Abe Kamara, and tonight we are diving deep into the 2025 tax season. I know we are already in the middle of the tax season. We have a special guest, right? We have discussed, when we started, when the tax season started, we brought an expert on here who told us, gave us some good information about what's going on about 2025 tax season. So we thought like we are in the middle of the filing season, so we thought to bring another expert to see how things are going, how long is it taking for folks to get their refunds, and all those great things. But whether there's what's new, I know we have a new administration, so has just been any changes and things like that. So tonight we're going to be deep diving into taxes, the 2025 tax season. And as I said, I'm your host, Abe Kamara, and tonight's going to be a great topic. We have our man in the house. I'll give him a chance a little bit here to introduce himself. But before then, this is the Inner Circle podcast. This is your community show where we bring you important information. So you can follow us on Facebook, subscribe to our YouTube channel, wherever you get your podcast, Apple Podcasts, Spotify. Follow us on Twitter, X, on LinkedIn, and everywhere, man. Follow this show, Inner Circle Podcast. It is becoming a phenomenon. So please join the conversation. You can participate tonight by putting a comment in the chat or by calling our number 817-600-1525. Before we get started here, there was a sad news in our community. If you are in Minnesota, there has been trending already. There was a kid, man, 18-year-old kid, high school kid, just 18. He attends like Chaplain Park High School. He was murdered, I think yesterday morning. So that's a very, very sad situation. It's a Liberian kid, Liberian. His parents are from Liberia. High school kid. He was found shot in his car. So that's a sad situation. We here at Inner Circle Podcast want to offer prayers to the bereaved family, to his family, and all those that are going through that tragic, situation. Man, gun violence is a real thing. Violence is a real thing here. I mean, 18-year-old child losing his life. High school kid. As a parent, I don't want to imagine what his parents are going through, but that's so much of a sad situation. So we here at Inner Circle want to offer our prayers to the family and praying for all those that have been affected by gun violence. So please prayers up to the bereaved family. With that, again, our topic for tonight is 2025 tax season update. As I said, we are in the middle of the tax season. So, uh, first of all, man, welcome to Inner Circle Podcast. Can you please tell us a little bit about yourself and your background?
Thank you very much, AB. Um, and good evening to the listening viewers across Minnesota America and the world at large who's following Inner Cycle podcast on a regular basis. I mean, it's sad, man. It's really sad. The kid that lost his life. I pray that his family finds closure, in this day and age to lose an 18-year-old child. I wonder, yeah. However, I'm personally, well, Marceline, and for full disclosure, I don't claim to know it all. I don't carry myself as someone who knows it all. My presentation tonight is based on my education, continuous learning, and thorough research. As a matter of fact, no tax professional knows it all due to how voluminous the tax laws are. It's impossible for one person to know it all. The tax laws changes every year. It changes every year. So, and my intent tonight is to make this interactive. It's a dialogue. It's not a monologue. I wish we had more people as usual when I watch the Inner Cycle podcast.
That's fine. Tonight it's only you and I here, right? Where you
to ask questions.
It's about providing our folks great education tonight, Master Said, right? We are in the middle of the tax season, so we want to know what's going on. But first of all, how long have you been a tax professional? How long have you been doing taxes in the United States?
I've been doing taxes since 2017 when I first got employed with H&R Block. Started as a tax associate, and then I moved on to a tax analyst. So I've been doing taxes, and then I established my own tax business back in Atlanta, Georgia, and I've been doing taxes ever since. But
so right now, so just to clarify, then you have your own. You say you started with H&R Block, but do you have your own business now?
Yes, I do. I have my own. I got my own tax business. Moving from Atlanta, Georgia, to Minnesota, Vigo Tax and Accounting, and I currently do taxes. I'm a registered tax professional with the IRS. But however, to begin with, I'll tell you guys a little bit of my background. I graduated from Stella Maris University with a BBA in accounting in 2012. And then I moved to the United States and did my master's in public accounting with Strayer University in 2019. I'm a certified business analyst with Kennesaw State University and also a CPA candidate for 2025. A little bit of my work experience in Liberia prior to my graduation from Stella Maris Polytechnic in 2011-2012. I worked as an intern with International Bank Liberia Limited. I was there for a year and a half. I worked for Duncan Oil. The current owner is Sekou Kana District Number 2 representative currently. I work as his accountant. And I also work with a media store, the current city mayor of Monrovia, Pacheruk. I work there as his accountant. And then I work with Calando's conglomerate as his accountant, the famous George Calando. I also taught at the Royal Institute of Secretarial Science on National Street, where I taught accounting and business maths. And then I moved over to the United States. I got into school, but then I started to work with H&R Block as a tax analyst. And then I also worked with Managed Health Solutions, a pharmacy that dispenses, drugs to nursing homes, stuff like that, as an accounts receivable specialist. And then I established Vigo Tax and Accounting, where I started to do taxes to tens and tens of hundreds of Liberians and foreign nationals in Atlanta, Georgia, and around the country.
So, your tax business right now is your full time. That's what you do. It's what you do full time.
It's a full time. Yes.
Okay.
It's full time. So I currently work with Intuit TurboTax currently as a tax expert, tax advisor. We are the live agents people meet when they want to do their taxes online. So I currently work with them as a tax expert.
Is that a consulting? Is that part of your business? Is that a consulting arrangement or something?
It's not a consult. It's an actual employment. An actual employment. Okay.
So you work with Intuit at the same time you have your.
I have my own business.
Okay, that's good.
I have my own tax business.
So, anyways, we are in the middle of the tax season. How is it going so far?
It's going good from my end. For
Uh-huh.
me, the transition as well. The Minnesota residents are accepting me really well, based on the fact that I have used one tax preparer's identification. I don't know, maybe that's the reason why, but my clients, their refunds are coming in pretty quick. But I've also talked to other professionals, and this time around, this tax season, I think that's exactly what it is. I think that's the norm around the country. Taxes are coming in pretty fast, but the usual things are always there. That delays in refunds for certain reasons. There are tax notices still going around that you owe some money, or you need this documentation, you need that documentation. The normal things still going around. But with regards to the refunds, it's been really quick, pretty quick, really,
What's
really
the
quick.
like? What's the average time this year?
I would say 2 weeks.
Two
2 weeks
weeks.
based on my
What?
experience. I don't know about other
What?
people. That's what I'm saying. Maybe it's because, yeah, I'll be honest. Maybe it's
Yeah.
because
Uh,
I've been with two reputable tax firms, and I still carry
mhm,
the same on PTIN. Maybe that's why. I don't know.
mhm.
But I've spoken with other tax professionals, and that's exactly what it is. I mean, people can call and attest to it. It's pretty fast right now. It's like 2 weeks. That's the turnaround time. Normally, it should be
Mhm.
21 days, 3 weeks. But the time has really shortened this time around. People are getting their money is smiles all over the place, and that's a good thing for business.
So what would be for folks, that have not filed their taxes yet? What will you tell them? Is that what would be one of your message to them, or your encouragement to them, right? Folks that are maybe sitting, hearing all this news, or they are folks, they are employees of the IRS getting laid off. Sometimes it's putting fear in people. Oh, should I wait, or should I go ahead and file my taxes? What will you tell those folks? Someone that have not filed their taxes yet, what will you tell them?
The normal tax laws still apply.
Okay.
Okay. The tax deadline is April 15th,
Hmm.
okay, this year.
Hmm.
And what I will tell them is there's a failure to file penalty.
Okay.
It still goes on.
Okay.
And that failure to file is when you refuse to meet the actual deadline, which is
Okay.
April 15th, including extensions, because you can extend the time you want to file your returns.
Okay.
So the failure to file penalty still applies. The combined penalty is actually 5%. Okay.
Hmm.
For each month or part of a month that your return is late, it's up to 25%. That stands, it's constant. And
Okay.
then the failure to pay penalty also still stands. Now, failure
Okay.
to pay penalty is if the IRS wrote you a notice that you have this amount of taxes due,
Sure.
and by the due date you haven't paid, right?
Yeah.
That is 0.5, that is half of 1% of
Okay.
the amount that you owe.
Okay.
Baby, stop me when I'm going too fast or when you don't
No, no,
understand.
definitely,
This is, this
definitely.
is for this is for educational purposes. So
Yeah,
if
yeah,
I'm
yeah. Oh,
going
yeah, I
too
will.
fast,
Trust me, I will.
stop
Yeah.
me, and then I will, go over what I said. Now,
Sure,
I
sure,
was
sure,
on the
sure.
failure to pay penalty.
Yeah, yeah.
If the IRS wrote you a notice, say you owe XYZ amount of money, and it has gone through the turnaround time. It has turnaround time. They have 30 days notice, they have 90 days notice, and you are at that deadline and you haven't paid those,
Mhm,
those taxes, it's
mhm.
actually half of 1% of of that penalty,
Okay,
but it won't exceed 25% of the taxes that you owe. So
okay,
I'll tell people right now, file your taxes. Even though, you could hold them for 3 years before you file them. But what will happen if the taxes you are holding on to, you already have you owe some money? It's
uh-huh.
going to be accumulating taxes. I mean,
Right.
interest is going to be accumulating interest and
Okay,
interest and interest. And before you
okay,
know, you owe a lot of money.
okay.
Okay. And another thing
Yeah,
is get all the required documents
sure,
that I needed. Your W-2. There's a whole lot more I intend to dive
sure,
into, but
sure, sure. Yeah,
I'll
yeah,
let you pose the question because
yeah.
I got a
No, no,
list
no.
of
Yeah, we'll
topics.
get to. Yeah, yeah,
Good.
yeah. I mean, we'll get to that. But before, so another thing is, right? What are some common themes this year your clients are telling you, or you are noticing, right? What are some common themes like that are coming up this year, right? Like, hey, maybe is the average refund amount, is it higher, is it lower? What are some of the common themes?
Another thing I already have listed I want to talk about is refunds. There's a whole lot
Mm-hmm.
of misconception surrounding refunds.
Okay.
Taxpayers think that they deserve more refunds, and some taxpayers know exactly what it is because they know the laws, right?
Mm-hmm.
It's actually basically the same. Okay, tax
Mm-hmm.
refunds are determined by your income first.
Okay.
Okay, your
Mm-hmm.
W-2 wages, right?
Okay. Mm-hmm.
And that is earned. Then they have the unearned income, like stocks, and dividends. So at
Okay.
the end of the year, the government puts all of that together and they assign you a tax bracket. Currently, we have 7 tax brackets,
7 tax
right?
bracket. Okay. Mm-hmm.
We were going into all of that. We have 7 tax bracket. Now,
Mm-hmm.
if your tax bracket is, so let's assume it's 12%, and you start at your job, you fill up your W4. The
Mm-hmm.
W4 is meant to tell your employer that this is the amount I want you to take out to send to the IRS on my behalf.
Okay.
So that is the employee's withdrawal certificate. That's how it's called, the employee withdrawal certificate. So
Okay.
basically, while filling up that W4, you are telling your employer that take this amount and send it on my behalf, right? Now,
Okay.
when that amount goes to the IRS at the end of the year, that is matched against what they expect you to owe. I'll rephrase that.
Mm-hmm.
Based on your tax bracket, you made 100,000. The people already know how much you're supposed to pay. What they do is they will deduct what you already pay on your job against
Uh-huh.
what you are expected, right? Now, if
Okay.
you overpay on your job,
Yeah.
right, it comes back as a refund. If you underpay, that is when you owe. So back to
So
the question. Yeah, go ahead.
yeah. So let me if you can just clarify some things on there, right?
Mhm.
What determines overpayment or underpayment? How do I know if I overpay or underpay? Like, I mean, you mentioned a W4. Do I
Right.
have to put certain numbers in there to determine overpayment or underpayment, or how does it work?
Good. The W4 is meant for your employer
Uh-huh.
to take up money.
Yeah.
I mean, from your paycheck to
Yeah.
send to the IRS, but you tell them,
Mm-hmm.
unknowing to yourself, you are telling them based on how many dependents you are claiming. We all got jobs, right?
Yeah.
Yes.
Yeah.
So if you tell them, oh, I have 3, 4 dependents,
Yeah.
basically you are telling them, I need all of my paycheck. Please don't take a lot of money out. Okay.
Mm-hmm.
So I need all of that. So that way they will give you more of your money. That means you'll be paying less in taxes. But if you
Mm.
tell them, you know what, I claim zero. I
Okay.
claim zero. It means that, you know what, I don't have any dependents. You can take off as much taxes as possible and
Okay.
send it to IRS. That way you'll be paying a lot of taxes, right?
Okay.
So
Okay.
at the end of the year, the IRS looks at what you've already paid them
Mm-hmm.
as compared to what you are required to pay. And then
Okay.
the difference is what you receive back as a refund, or you owe them some money.
Okay.
So back to your question, the situation with refunds
Mm-hmm.
varies. You understand what I'm saying? It
Mm-hmm.
varies.
Mm-hmm.
Now, in
Mm-hmm.
addition to that, specifically to Minnesota, you
Mm-hmm.
have the working family credits, which is a
Mm.
refundable credit, right?
Okay.
You
Yeah.
have the renters credit, which is a refundable credit. So we'll get into all of that, okay?
Sure.
Because I
Sure.
have all of that already listed. But I will
Okay.
allow you to post the question, okay?
Yeah. So is that I know while we're on refunds here, one of the things people like to hear, right? Those are expecting refunds. Like, what is the average amount this year? If you if you if you would like to share, yeah, what is the average amount? Those of your clients that are getting refunds, or I mean, some of your colleagues that are that
It's
their clients are
fluctuating.
getting refunds. Yeah. So,
It's
what is the average amount?
fluctuating.
I know
But
it's fluctuating. What is the average amount?
the average amount with someone who has a child,
Mm-hmm.
and based
Yeah.
upon
Yeah.
whether you've paid enough taxes, right,
Mm-hmm.
that you don't owe
Mm-hmm.
them, the average
Mm-hmm.
amount is about 5 to 6 thousand for a child,
Mm. Okay.
just for
Okay.
one child.
Okay. And then let me come to the earned income tax credit. Then has that changed this year? Has there been any changes? And who qualifies for it? The
Okay.
earned income tax credit.
The earned income tax credit.
Mhm.
Um, hold on just a minute. The earned income tax credit. It's just one of many credits, that
Mhm.
Congress gives the regular taxpayer, right?
Mhm.
It's actually based on your filing status and your age and the amount of money you make. Why I say your filing status, right? You could be single, you could be a head of household, you could be
Mm.
filing married, filing joint, or you could
Okay.
be filing married, filing separate. Now, if you're a single person who you are not claiming a child, you
Uh-huh.
should be at least 25 to get the
Okay.
credit, right?
Okay.
The
Uh-huh.
earned income credit is actually meant for low income earners. So
Okay.
basically, only people who make very low amounts get the earned income credit. The government is basically trying to tell you that we understand you didn't make a lot of money, but you worked. Is as a way of encouraging you to work more. So they
Mm.
gave you that credit. But it also comes with some limitations. If you make a lot of money, right,
Like how
you
much?
don't get
How much is a lot?
53,000 above.
Oh wow.
Yes, if you make 53,000 above, I'm not really exact with the figure right now, but it's
Uh-huh,
50s in the
uh-huh.
50s, right?
Yeah. Yeah.
It's in the 50s. If you make that, you don't get the earned income credit,
Oh wow.
right? But you would be surprised to know that somebody who made 10,000,
Uh-huh.
they give them the earned income credit because they're trying
Mhm.
to encourage you to work. That's why they call it
Okay.
earned income.
Okay.
You worked,
Okay.
so
Okay.
you get that, right?
Yeah. Well, folks, tonight we are discussing the 2025 tax season update. We are in the middle of the tax season. It is, it's like it's March 3rd. The tax season started at January 27th, if I'm not mistaken. And we are in March. It's going to be ending April 15th. So tonight we have a tax expert here who is, updating us on what's going on, some of the changes, how long is it taking for folks to get their refunds, what's the average amount folks are getting, who qualify for the earned income tax credit, all of this good stuff, right? What impact is the Trump administration having, the new IRS on the Trump administration? What impact is that having on refunds or filing tax and all those stuff? So tonight we have a special guest in the house, he's been doing this since 2017, and so he has a lot of knowledge, has a lot of things to share with us tonight. So you can call our number 817-600-1525
That's a
to
good
ask
one.
questions.
Let
To
the
ask
people call with
questions
their questions.
to ask
Yeah,
questions. If you have
very
a
good.
question, you can also put a comment in the chat. If you haven't filed your taxes, right, you can put your comment in the chat or your question or your comment. If you are far and maybe you didn't get what you're expecting, right, you can still call and ask, or you can put a comment in the chat. But one of the things I wanted to ask quick about the 1099. We have a lot of folks in our community who does gig work, right? People do Uber,
Mhm,
Lyft or delivery and all those stuff, right? For
mhm.
the what is the 1099? Can you educate our audience on the 1099K form?
The 1099K
Hmm.
or 1099 NEC,
Okay.
right?
Hmm.
Um, you are considered an independent contractor.
Okay.
If they work for somebody,
Hmm.
they are not taking out they are not, I'll put it this way, they're not taking any money from there to give it to the IRS. You pay your own taxes.
Oh,
Yes. So
okay.
once you receive the 1099K or the
Uh-huh.
1099 NEC,
Uh-huh.
under the tax laws, you are being considered an independent contractor.
Okay.
Right? That means you control your own hours
Uh,
on the job. The tools you use to do the work is basically yours.
okay.
No employer control the way you work. You work at
Mm.
your own will and pleasure.
Hmm.
So people like that, you are being considered a 1099 NEC or 1099K person.
So
Now,
what is it? How is it? How does the IRS determine that tax bracket if I'm an independent contractor? How do I know which tax bracket do I fall? And how do I know which taxes or what taxes to pay?
okay. Speaking of tax bracket, I was supposed to send you
Hmm.
the tax bracket for 2025. But however, I
Hmm.
will just go into it right
Hmm.
now. So I mean, your employer, not your employer, or really, the person you do the contract for, they
Hmm.
send you a 1099 NEC or 1099K, and then they send another copy to the IRS.
Okay.
You don't get it alone, right?
Okay. Yeah. Yeah. Yeah.
You don't. So let's take example for Lyft or Uber, right?
Hmm. Hmm.
They will only catalog all of your driving's earnings for the year. right? Sometimes
Mhm.
they'll also put the mileage there or some
Okay.
of the expenses that you incur while driving.
Okay.
But mind you, they will also send a copy to the IRS.
Sure.
Now, you are required to file your own taxes. That is, you require to come to people like us, and
Mm-hmm.
I'm supposed to put it in as your own business,
Okay.
okay? Where
Mm-hmm.
you will be under Schedule C, right? And
Mm-hmm.
you are also allowed to deduct your own expenses.
Okay.
You understand? Now,
Mm-hmm. Mm-hmm.
if you're driving Lyft, you make some expenses like repair and maintenance on the
Mm-hmm.
car,
Mm-hmm.
gas, right?
Mm-hmm.
So
Mm-hmm.
you have two categories of expenses you can actually deduct as a 1099 NEC or 1099K, right?
Okay.
It doesn't have to be Lyft. You can be doing how do I put it? Which one? You can
I
be
mean,
doing
Amazon, even Amazon delivery, right? Amazon
exactly,
delivery,
exactly.
whatever.
Depends on how the IRS considers your employment, right?
Okay.
So you got me repair and maintenance. You got
Mhm.
phone bills. You use your phone to navigate the various locations to deliver your food.
Yeah.
So you will put them there, but you got to have a record, right?
Oh,
Because
okay.
yes, you got to have a record. The IRS won't bother you, but you got to have a record just in case your
Hmm.
expenses seems too high.
Yeah.
Then the IRS will come, but this is not normal. Then they
Yeah.
will write you a notice. So we want you to justify the
Yeah.
expenses that you put on your returns. But
Okay.
one, you are allowed to file your own taxes, whatever
Yeah.
expenses you. So basically, that's what the 1099 NEC and the 1099K is. You are considered an independent contractor and not an employee of another person.
So what are some of the deductible items am I allowed? And first of all, right, if you file on 1099K, do you have more advantage versus compared to someone who's an employee?
No,
Okay. Say
you don't
more.
have a lot of advantage
Say more.
because
Yeah.
the only thing you are allowed to deduct your own expenses, right?
Uh-huh.
But there is this thing in the tax law that says your expenses got to be reasonable and not extravagant.
Mm.
You understand? You can
Mm-hmm.
say you drove the whole year, you made $10,000, but your mileage is 50,000 miles. Does that make
Okay.
sense?
Okay.
You know,
Okay.
I mean, what kind of
Mm.
driving you were doing? You know
Okay.
what I'm saying? You can't
Mm.
say that you drove the whole year, you made 15,000, but then you made repair and maintenance on your car of 50,000. It's unreasonable.
Okay.
So these are the things they look at, right?
Mm-hmm.
But there are deductions you can take. But what they do is the IRS they look at the expenses and say,
Uh-huh.
is this reasonable for a person who drove 5,000 miles in a year? Look at your
Okay.
expenses. Is it reasonable? It shouldn't be
Mm-hmm.
extravagant. It shouldn't be more than what it's supposed to be. So
Mm-hmm.
back to your question, if there is any advantage, I'll say no. Because with your W-2 employee who's been employed by somebody, you
Mm-hmm.
actually taking money out and
Mm-hmm.
sending it. You can take as much as you want and send it, and that protects you from being underpaying your taxes. You understand?
Mm-hmm.
So
Mm-hmm.
that don't is there's not an advantage or disadvantage because what the IRS can come back to you at any time for an audit if you're 1099 NC.
Mm-hmm.
If you overstated your expenses, you're going to have to pay all of that money back.
Okay. So what kind of expenses then can someone like filing a 1099 deduct to lower their taxes, to lower their taxable income? What are some of the things they can deduct to lower their taxable income?
In my experience, I'll give you an
Mhm.
example of a travel nurse.
Yeah.
Okay, a
Yeah.
travel nurse, they deduct some taxes from you, but you can deduct some of your own personal expenses.
Okay.
You understand?
Like what?
You
Like
leave,
that.
yeah, you leave from Minnesota, you go to North Dakota
Mm-hmm.
for a job. You have your you take Uber. You're not driving there. You don't have your own car there.
Mm-hmm.
So the Uber usage, the Lyft usage, the hotel you rent and sleep in. You
Mm-hmm.
understand?
Mm-hmm.
The scrubs you wear. You understand? And the
Yeah.
food you buy and all of that. That's an example. You can deduct all of that. So then we go back to the Uber and the Lyft drivers, right? Or
Yeah.
let's say food delivery. Food delivery, right?
Yeah.
Your mileage. Now, mind you, for those who use Uber and Lyft, there are two type of expenses. You get two categories. One
Yeah.
is mileage. You can only
Okay.
deduct mileage as
Mm.
compared to actual expenses. Now there's mileage and there's actual expenses, but you cannot deduct the two. So if you decide to deduct the mileage on your car the entire year, say you drove 50,000 miles, it's actually 60 cents per mile.
Okay.
The tax law, the current tax law is 60 cents per mile. So it's 50,000 miles times 60 cents. That will be your deduction. Or you can say, you know what, you can do a comparison and say, you know what, I think my actual expenses were more. All right, my repair and maintenance, my phone bill, what else? My toll fee, depending on where you drove.
Yeah.
But you cannot deduct both of them. So it's going to be mileage versus actual expenses.
Okay. From your experience with your clients, right? I know like some folks, right? Hey man, some of us, the gig economy thing, the Amazon, the Uber, the Lyft, that's our side hustle. If I'm working full time and doing that, does that increase the potential to? I mean, does that increase my income and the potential for me to owe taxes? Okay.
It does. It's even a disadvantage to you. Okay.
Really? Why?
Yes,
Why?
it is. Because the American tax system is a progressive tax system, right?
Okay.
It's basically the higher income you make, the higher your tax rate.
Okay.
So let's assume you're working a regular job and the entire year you got 70,000.
Yeah.
But you did Uber and Lyft that the IRS didn't take taxes and you made additional 30,000. What do you think would be your annual income? You hit 100,000.
100,000. Okay.
You hit 100,000. So it's actually a disadvantage and not an advantage because taxes start with.
Why if I'm doing that Schedule C, right? As you mentioned earlier, if I'm doing that Schedule C and I report losses.
If you report losses now,
from my gig work,
that's a deeper one. But I'll tell you what happens as a tax professional. As an individual, you can only deduct $3,000 a year on your taxes, period. So it doesn't matter how many losses you incur for the year. If you incur 15,000, you are only allowed to deduct 3,000. But what happens to the balance 12,000? You can carry it forward to the next year and deduct another 3,000, another 3,000, another 3,000. So it doesn't matter how much losses you incur during the year. You are only allowed to deduct 3,000.
Okay. Well, so folks, tonight we are discussing the 2025 tax season update. As I said, we are in the middle of tax filing season. I mean, it's like, it seems to be a busy time. I don't know. The tax professional can tell us when is a busy time. That's my next question here to him. When is a busy time and things like that. But folks, you can contribute to the conversation by calling our number 817-600-1525 if you have a question for our guest, or you can put a comment or question in the chat. Please do that if you like to. If you like to contribute to the conversation. But one thing, let me come back to the whole. Let me say this. When is the busy time of the year for the tax season?
Right now.
When is it really busy?
Right now. We are actually in the peak season right now. It's called peak season for us who work with the big tax firms. And why is it the peak season? Some people file their returns early, right? Some people like to wait until last minute of time. And now, knowing that the tax due date is April 15, what is the date today? Today is March 3rd.
Yeah.
Right? So we are actually almost in the middle of the tax due date. So that's why it's called peak season, right? Rush hour. Oh, I haven't filed my taxes. Oh, when's the deadline? Oh, I got to do it now because I want my refund before the deadline.
Yeah.
So we are actually gradually approaching the peak season.
Okay. And how long does that peak season last? Does it last until the end of the rush hour?
It gets worse as the month progresses, right? It gets worse as the deadline approaches, right? So you find a lot of people making last minute time rush by April 1st. Because remember, there is a failure to file penalty. Okay, and there is a failure to pay penalty. But if you give me a few minutes, I would like to. in
before you go forward, like, Solo has a question here, right? Say, is it permissible for a married couple to file their taxes separately? If these options available, what are the anticipated implication and consideration associated with such a filing status?
very good. I like
Mhm.
that question. I
Great.
get it all the time.
Mhm.
It's actually disadvantageous to file separate
Mm.
as compared to filing joint,
Okay.
right?
Mhm.
One, when you file joint, you get a lot of deduction.
Okay.
Let me explain to you married filing separate, right?
Mhm.
Now, the tax bracket for 2025,
Mhm.
um, if your income is between $23,851, I will take my time to, slow it
Yeah.
down
Yeah.
so
Yeah.
the
Yeah.
numbers. If
Mhm.
your income is between $23,851
Yeah.
and 96,000,
Mhm.
you get to pay $2,385 plus an amount over 23,850. Don't worry, it's all tax bracket stuff. But I'll break it down.
Yeah.
One of the disadvantages of filing separate is that you can take student loan. Okay,
What?
that's
Say more. Say
you can
more.
yeah, that's it.
Why? If I
You
file
can
separately, I
if
can't.
you
Oh,
file
like if
separate,
I'm
you can
married
take
and I file separately.
yes, you can
Okay.
take student loan. That's it's going to be a problem. It's going to be a big
Yeah.
problem.
Okay.
Another one, I mean, fact check me. That's what I said. Nobody
No, no, no,
knows it
you're the
all.
expert. No, yeah, yeah, yeah.
Good.
Yeah, yeah.
Nobody knows it all. The tax laws changes every year. Now, but these are
Mm-hmm,
things that are constant.
mm-hmm,
Another thing is if your wife is atomizing, I
mm-hmm,
didn't have the time to talk about atomization.
mm-hmm.
You have to atomize. That is, if she decides to take all of the expenses for the house, maybe mortgage interest, medical expenses, charitable deduction, you have to do the same. You cannot take the standard deduction. I will have the time to talk about standard deduction versus itemized deduction. So there's a whole lot of disadvantages that goes into choosing your filing status. And I
Okay.
can also talk about filing status. But
Mm-hmm.
what I will tell you is more advantageous to file joint than to file separate. Because look, listen to this. When you file joint, you have one tax bracket. Okay? If you
Mm-hmm.
file joint, you have
Yeah.
one tax bracket. But if you file separate, the IRS is going to impose taxes on you separately.
Oh, okay. Okay.
See that? And
Mm-hmm.
another thing is um both for you carry the liability no matter whatsoever. Say for
Okay.
you, you owe a lot of money somewhere, right? You
Yeah.
owe a lot of money somewhere, and your wife don't owe a lot of money, right? You get to
Yeah.
carry that responsibility. She doesn't.
Okay.
The both of
Okay.
y'all, the both at a certain point in time, the both of y'all will carry the liability. So it's a lot goes into. That's why it's always good to consult the tax professional. What are the
Sure.
advantages and disadvantages of filing separate as compared to filing joint, and let them
Okay.
tell you. If your tax professional can tell you that, I'm sorry.
That's
Yeah.
it. I mean, that's a good one. Okay, thank you. I mean, thank you for that. Thank you for answering Solo question. So let's get to the standardized and itemized, right? First
Okay.
of all, when it comes to the standard deduction, right? What is the new? Is there anything new about the standard deduction for 2024, and how does that affect like the tax return this year?
Okay. The standard deduction has actually increased, right? Increased
Okay.
from last year. Now for
Okay.
2024, we are actually filing.
So, okay, let me hold you right there. What was it last year and what is it this year? People like to hear those kind of numbers. Our people, yeah.
I
What
know.
was it last year and what is it this year?
What I can tell you, I can look it up real quick because there are
No, no, no.
numbers,
Okay, if you
right?
don't know,
Yeah,
that's fine. That's
yeah, yeah,
fine.
yeah. No, no, no. But I can tell you what
No.
it is now, and then I
Yeah,
can go
yeah,
back
yeah,
and tell
yeah,
you
yeah,
what
yeah,
it
yeah.
was,
Mm-hmm.
right? I
What
can
is it
tell you what
today?
it is right now. Now,
Yeah.
the standard deduction for 2024 for a single person
Mm-hmm.
and married filing separate, they
Yeah.
got one. They got one standard deduction.
Okay.
The single people and the married filing separate, that's another disadvantage. You see that? Single people and
Mm-hmm.
married filing separate. Y'all got the same standard deduction. And the standard deduction is actually 14,600.
Okay.
That's a
Okay.
standard deduction.
Okay.
For head of household is basically you got a child, right? An
Mm-hmm.
underage child, um, and you pay you pay majority of their expenses for the year.
Mm.
You are considered head of household. Your
But
standard deduction is 21,900.
okay, let me hold you right there, right? You know, we have a lot of United Nations family, right? You have maybe like you have kids, you have young kids living with you, or they might be living in two separate households,
Mhm.
right? It's like, but you are maybe you are single, but you know your child is between the two households. Who call it? I mean,
Mhm.
who gets to file head of household? Can both of you file head of household?
No, both of you cannot file head of household. So the rules are the person the child spends 6 months plus with,
Mm-hmm.
right?
Mm-hmm.
Sleeps under his or her roof for 6 months. And
Mm-hmm.
that person provide, all of their living expenses.
Mm-hmm.
That person qualifies.
To be
You
the head
know,
of household for that
yes,
child.
to be the head of household. The person spend more nights with you,
Mm-hmm.
but it has to be 6 months plus. Now there comes a time that it can even be even. It can be even. The child spend the same amount of nights with the mother as compared to the father. Now, how do you determine that? At that particular stage, the person with the most income father
Mm.
child.
Okay.
Okay, but
So,
then
so,
hold
so
on. Then,
clarify
but then
something. Yeah,
go ahead.
clarify something here, though, right? Okay.
Mhm.
Finish your talk. Finish your talk. I got a follow up question here.
But
Yeah.
then when it gets to that stage, I mean, there
Uh-huh.
are custody battles and all that kind of stuff. There can be a written agreement under the tax laws. One
Mhm.
person can relinquish the child. Say, you know what? Even though I'm the person who's supposed to be having a child, I will put it that way. I'm the someone, but I relinquish the child to you to file for this year,
Mm.
and then y'all can make a written agreement. So we as tax professional, it is our responsibility to ask these questions.
Yeah. Yeah. So once you're asking that question, then like if you are claiming head of household, I want you to clarify this. If you are claiming head of household, it means you have to file the child or the children.
Correct. You have to
Okay.
file the child or
Okay.
children, right?
So you
If in
cannot
case
claim
you decide
you, ca-
not to
you
file
cannot
them,
claim you cannot claim head of household if you're not claiming any
no,
child.
no.
Okay. Okay.
Head of
Okay.
household is only meant for an individual who is going to claim a child. Don't let
Mm.
nobody fool you,
Okay.
right?
Okay.
Okay.
So if you're not, it means that if you're not claiming a child, even though you might have children living with you, but if you're not claiming it, it means you have to file single.
You have to file single, right?
Okay.
But don't
Okay.
get it wrong now.
Mm-hmm.
If you can even claim your nieces and nephew, they are called qualified dependents, right?
But don't they have to be living with you though?
They don't really have to be living with you. They can even be on campus. But as long as you are paying most of their expenses
Oh, okay. Okay.
and they are not married and they are not, nobody else can file them.
Mm-hmm.
Nobody else will be able to file them for that year. That's where the complication comes in. Nobody
Okay.
filing them. You pay most of their expenses. They are under 24 and
Mm.
they don't make a certain amount of money. But it
Okay.
can be your niece, it can be your nephew, it can be your even your girlfriend children that live with you the entire year.
Mm. Okay.
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 So I'll go
Um.
back to hold on just a minute.
Yeah. Yeah. Yeah.
The
Yeah.
head of
Finish. Yeah.
household,
Finish
the
those
standard
numbers. Yeah.
deduction right now is
Mm.
21,900.
Okay.
Okay. And
Mm-hmm.
just what is the standard deduction? Taxes start with income, right? All of your income for the year, right? Earn or unearn. Earn is when you work at a working place and you get W-2. That's earned. On earn, it could be dividends. You got stocks and bonds. They are not considered earned, but at the end of the day, they are all considered income, right? That's
Mm.
where taxes begins. Now, the IRS combine all of that. They say you made this much. But however, by legislative grace, Congress will tell you, we want you to deduct this amount. But first, you have to determine your tax status. Are you
Mm.
filing single? Since you made 50,000 the whole year for 2024, take off 14,600
Okay.
before we apply taxes. So it's actually 14,600 in the balance. So that balance will be your taxable income, right?
Mm.
So
Mm-hmm.
for married filing joint, this is the advantage I told you. When you're filed joint, your standard deduction is 29,200.
Oh wow.
Yes. So if you got kids, the kids are entitled to 2,000 deduction for this year. 2,000. So that's why we have refundable credits and we have
Is
numbers.
that a child tax credit? Is that what it is?
That's the child tax credit,
Okay.
right?
So it's 2,000 this year,
It's 2,000.
but is that lower? I mean, wasn't it high during the pandemic?
It was for a reason,
Okay.
right? It was when the administration passed the American Rescue Plan Act of 2021.
Yeah.
That act was meant to help relieve families. You know,
Okay.
I mean, the pandemic was not their fault, right?
Okay.
So that act was meant to relieve families and businesses. That's
Sure.
where we started to see the economic impact payments, the
Okay.
1,400 and all of that. And by that, they say, you know what, we got to help families with children.
Okay.
And they were giving children under 5, 600 each, and then they even increased the child tax credit up to 3,000 plus.
Okay. So now it's not 3,000 anymore. It has come back to 2,000.
That's why I said tax laws, it change every time. So there's no expert. What we say is based on continuous research, you know, and knowledge that we learn over the years. So it's not constant. Okay.
Okay.
All right,
so now that we're done with it, are we done with the standard deduction? Is that
we're done with the standard deduction, but let's also talk about the itemized deduction.
Yeah, that was my next question. Let me explain a little bit about the itemized.
Good. The itemized deduction, right? The IRS, I mean, the IRS says you don't want to take this amount we are giving you, 14,600 as a single person, because you say you got medical expenses and all of that. You are allowed to deduct that. So you can deduct your medical and dental expenses out of pocket, or maybe you pay out of pocket insurance. Doctor visits, you can deduct that, right? And then you can pay, your taxes that you pay. You can deduct interest you paid on your mortgage. It's called mortgage interest statement. You can deduct all of that. You can deduct gifts you gave to charity. Let's assume you're a charitable person. You make a lot of money and you give donations to charity, right? Charity organizations are qualified by the IRS. It can be churches. It can even be a government institution.
Sure.
Right? Whatever you donate to them is tax deductible because they are considered non-profit. So they are not taxed. So since they are not taxed, you are required whatever you give them. It doesn't have to be cash. It can be properties. It can be motor vehicles. It can be clothes. It can be food.
Yeah.
That's where you see a lot of businesses like I would say CUP, because they donate a lot of food nearing their expiration date. They donate it to churches because all of that is a write-off.
Sure.
Right. So you can deduct. Let's say theft losses. Let's assume disaster stuff like there was a flood, there was a fire. You lost your house. You lost your cars. So the IRS said, but you have all of that. If you think it is more than what we are offering you, then go for that because you are allowed by law to do that. So all those things are considered itemized deduction, right? So, but the only way you can file them, they have to be more than your standard deduction. Do you follow?
Got it.
They have to be more than. So if they're not more, the IRS will automatically give you their standard deduction.
Yeah, standard deduction. Okay, that's good. There's a question here from Grace. If a married couple been filing together and they decided to file separate, can they go back and file jointly in the next tax season?
Yes, they can. They can. There are so many reasons why couples decide to file separate. Now, let's assume you took your student loan, right? And you owe some money and you're defaulting on your payments. You understand? And your wife don't want to bear that responsibility, right? She can file a form called innocent spouse or injured spouse, and then she can be exempted from that. But there are so many reasons. Another reason is the man abandons his wife. He's not in a home. He lives in.
Let's stick to the one that are together, right? Are together.
Some of the reasons why they can file separate. I'm just saying there are so many reasons. So you are allowed. Now, if for any reason you decide to come back and file joint, you are also allowed.
Does that create any kind of a penalty though? Does that create any kind of a complication?
No penalty at all. Married couple decide to combine their income and take advantage of the tax benefits. That's it.
Okay. So what if I was filing separate as a married person, and then now, right, I've been owing. Now we decide to file together. How does that? Who? I mean, like my tax debt.
Both for
Uh-huh.
you bear the responsibility.
Okay.
Both for
Okay.
you will bear that responsibility. So if you don't pay what you're owing,
Mhm.
they will write you the balance and write your wife the balance that you're owed because you decide to file joint, you decide to take on the liabilities combined. So whatever you
Mm.
owe, she bears the penalty.
So if I was fighting again, man, I want you to make this clear because I think that
Go
that's why
ahead.
this question might have been getting that right. It's like
Go ahead.
we're fighting separately. Maybe like one part I was getting refund, and then she was, I mean, and then she been owing.
Hmm.
Now when we decide to fight jointly,
Hmm.
that the tax debt
Hmm.
does it become both of our tax debt?
Yes, it's the both
Okay.
of you. Both for your bear that responsibility. I gave you an instant, right? The
Mm-hmm,
Obamacare.
mm-hmm,
When you sign up for it,
mm-hmm,
you are supposed to use certain limits on healthcare. Now, if you have your husband and you
mm-hmm.
have your kids there, and you use more than what you are allowed, it's called
Yeah,
the advanced premium tax credit, right? They gave you that,
yeah.
and because you use what you are not supposed to use, and you owe some money because you the whole year you don't want to use Obamacare, you don't want to went to hospital, the man didn't
Mm-hmm,
go, and you're
mm-hmm,
supposed to pay $3,000 back. Both for you are responsible for that three
mm-hmm.
thousand dollars, even though the man didn't go to the hospital.
But once you fight jointly now, it becomes both of your liability.
Both for your liability.
Okay, okay, that's good. So the last touch here, right, is that what task cut policy have been proposed or implemented by Trump this year? Will you share any information on the impact it has on tips and overtime? Has there been any new policy or new tax law that have been passed? I know
Oh,
Congress has been debating that, but I'm not sure. You're the expert, so
a lot, but they are
mm,
still in the works. There are
okay,
just news flying around about overtime and this and that. But there's a lot that has been proposed. It has to
mhm,
go into law. You know, the
okay,
administration just started. It has
yeah,
to go into law. When it finally goes into law, right, then
mhm.
it becomes it starts to take effect. But there's a lot. I'm not able to go into
Yeah,
that
yeah,
right
no,
now.
no, no,
But
no, no. I
there's a
mean, exactly.
lot of tax. There's a lot of tax credit. Some new things are. It's not really new. It's been around.
Mhm.
Um, if you have solar materials that you buy in your house, solar panels and all of that, they are tax deductible. All right.
What are some of the now that you're on our tax credit and tax deduction? What are some of the maybe what how we call it? What are some of the good ones this year? What are some of the one your clients or folks are claiming this year?
Okay, it's a lot.
Yeah,
It's
okay.
a lot.
Just name a few. Just name a
The
few.
child tax credit. Okay,
Okay,
the child
that's one.
tax credit,
That's a popular one.
popular one, right?
Yeah, that's
Um, um,
he said that is
okay.
$2,000, right?
With respect to Minnesota,
Mm-hmm.
okay, because I live in Minnesota now, and
Mm-hmm.
I file a lot of Minnesota tax return. The renters credit is a very popular one. It's a very the renters credit. A lot of people going for it. Now, in order to qualify, you have to get the certificate of rent paid, CRP. Your renters property manager is supposed to send that to you once your name is on the lease.
Mm-hmm.
To a lot of that. Now you got to have a valid social security number, okay, to take advantage of that credit. You got to be a full year or part year Minnesota resident. So once
Yeah.
you spend more than 180 days in any state, you are considered to be a full year resident. So if
Is a rental tax thing only specific to Minnesota? I know you
yes,
don't. Okay.
the CRP is for Minnesota specifically, and I'll tell you, every state got their own benefits.
Okay.
Every state. So Minnesota,
Mhm.
one of the most popular one is the renters credit. A lot of people rent. So once you pay rent, you get the CRP. Now, if you're two in the apartment and both of your names are on the lease, the apartment complex divide the amount you're paying and they separate the CRP for both of you to file.
What's about homeowners?
Homeowners are also there. You get a credit for that. But the most popular one is the renters credit. And then yeah, I'll say the renters credit. In addition to the American Opportunity Tax Credit for people who take student loan to go to school, the lifetime learning credit for people who are acquiring a higher education, doing
Okay.
their masters and all that kind of stuff. And then the child and dependent care credit is another thing. Most of my clients are going in for the child
Okay.
dependent care credit is for dependents under 13 years old.
Mhm.
So if you work and your child is under 13 and you take them to daycare, after school program, right?
Mhm.
Once that entity has an EIN, they got an address, all the money that you pay to them for the year,
Mhm.
3,000 or is tax deductible. You can get a credit for that. So
Mhm.
a lot of people going for that because some people take their kids to the Oma across the road. They do pay money, and the only thing they need from her, Oma, give me your name, your social security, and your address. That's it, and you get a credit for that.
Okay.
So those are
Okay.
some of the most popular ones. There are a lot of other credit. I mean, there are a lot. If we decide to go into it right now,
When you are claiming those
I was
credits,
not-
do you have when you are claiming those credits, do you have to itemize or you go the standard deduction? How does it work?
it go other ways. You are
Um,
entitled to it whether you standardize or you do itemization. You get it, right?
okay.
So let me talk a little bit about the credits. Now, when the IRS impose your tax, they already determine your taxable income, right? You're not
Mhm,
deduct the
mhm,
standard deduction, all of that,
mhm,
and they determine your taxable income.
mhm,
They apply tax to it, right? After all the
mhm.
deduction, they say, oh, your taxable income is 25,000, right?
Yeah, yeah,
Based on your tax bracket, based on what tax bracket you fall in.
yeah,
Hold on just a minute. Based on what tax bracket you fall in,
yeah.
now the tax bracket range from 10%. They got a 10% tax bracket.
Mm-hmm.
You make certain amount of income, you fall in the 10%. They got 12% tax bracket. They
How
got
hard does it? How hard does it go?
oh, I can show you. For single taxpayer, right? If your
Mhm,
income is between $0 to 11,925, your tax
mhm.
bracket is 10%
Okay.
for single people,
Yeah,
right? If your
yeah.
income is
Uh-huh.
$48,476
Yeah.
to 103,000, if it's between there now,
Mhm.
350, your tax bracket is 22%,
Wow, that's high.
very high. So
Okay.
from 48,000 all the way to Buck, let me
Yeah,
put it that way. Your you know the Bible already. When you
yeah.
make 48,000, between there, it can be 50, 65, 70. Your tax bracket is 22%. Not just
Hmm.
22%, plus
Mhm.
$5,578 over $48,475. I will
So
go through.
if you are beyond the 103, and so if you are above
If you are
103,
beyond 103, your tax bracket is 24% as a single
oh,
person.
okay.
24%. Then we go to married filing joint. If your wealth income for the year is only 23,850,
Mhm.
you're in the 10% tax bracket.
So if both of your income is 100,000, that's so
If
like
both of
okay.
your income is
Mhm.
you're in the 22% tax bracket, that's where the benefit comes in.
Oh.
You see that? From 96,000, it starts from 96,000.
Mm-hmm.
Now the single person, in order to be in the 22%, you got to hit 100,000, right? They excuse me just a minute, my brother. My computer just went low.
No, you go. We'll
Yeah,
soon be
hold on.
wrapping up here. We'll soon be wrapping up here, folks.
Okay, yeah.
Tonight we are
So that's it
discussing
now. So the
2025 tax
credits,
season update. Yeah.
so the
Go ahead.
credits, when the people determine your taxes, the IRS say, you know what, take out the child tax credit, you're entitled to it. Take out the earned income credit, take out the rental credit. They still bringing your taxes down.
Oh wow. Okay.
So based upon that, so that's why the credit is important. Based upon that why you will owe. So the credits are actually meant to reduce the actual taxes you owe.
Oh, that
That's
way you owe, and then or you might get a
or
refund,
you might
right?
get a refund depending on what kind of credit it is, right? The earned income credit is refundable. So if your tax is $100 and your credit is $50, right? Okay, your tax is $100 and your credit is $200. The 200 will wipe away the 100, and the bottom 100 you get it back.
Oh.
That's the refundable credit. But some of them are non-refundable. It can only wipe your taxes, but you will not get nothing back. Right? For the sake of time, let's just go ahead.
Yeah, folks. I mean, it's an important conversation, man. You've been providing some great information here, right? Folks. Tonight
There's
we have
more.
been
There's more. I
discussing.
haven't even touched on the do's and the don'ts.
Well,
What you shouldn't do.
well,
Right?
that's it. We'll get into that quick, and then from there, I said this is a 1 hour show, but you provided some good information. So
Okay.
we'll push it for a few more minutes, and then
No
before we wrap it
problem.
up.
No problem,
Folks,
my brother.
tonight we are discussing 2025 tax season update. You know, we are like the middle of it, right? This is March 3rd. If you haven't filed, man, you should start thinking about putting your stuff together, get those W-2s, and start filing. If you are someone who's doing gig work, I hope you have gotten all your stuff from Uber, from Lyft, or from Amazon, to get those going. So you can stay call our number 817-600-1525, or you can put a comment in the chat, ask your questions, put a comment or whatever. I'm getting some great information here tonight. So let's get to the do's and don'ts, right?
Do's and
About
don'ts.
filing taxes. What
The
first
do's
of
and
all,
don'ts
let's get to the do's. What are the do's? What you
The
must
do's
do.
is file your taxes on time so that you don't pay late filing penalty.
Mhm, mhm,
All right. If the people wrote you a notice last year, they say you owe a certain amount of money, pay that taxes. Otherwise, it keeps accumulating interest. So the longer you take to pay, the more money you accumulating on yourself, because they will come after their money, either through garnishment. That is when they can go inside your paycheck,
mhm.
or they can take your house from you only because you owe them a certain amount of money. So
Okay.
that's one of the do's. File your taxes on time. Another
Mhm,
thing is make sure you have all your tax documents. For people who did the Obamacare, right?
mhm,
If even for 2 months or 1 month in a year, you went to the marketplace, the healthcare marketplace, you got insurance, make sure at the end of the year you get your 1095A. Okay, it's a breakdown of all the money that you spend and all of that. It is required when you file your tax return, because if you don't submit it, your tax returns get rejected.
mhm.
So
Yeah.
that's some of the do's. Another
Okay.
thing, if you're filing with somebody, make sure they sign your return. Right? If your tax preparer don't sign your return, give it back to him. It is required by law. He must put his signature. He must put his PTIN, the number that he got from the IRS every year. Say he's a paid tax preparer. He must
Mhm,
put it on it,
mhm.
because you know
Okay.
what? They got some preparers they would do. And then another thing, get your copy. Don't be reluctant. If the man file or a woman file your return, request for your copy. By law, they are supposed to get your copy and review what's on it. As a matter of fact, let him break it down to you.
Okay.
That's where
Okay.
people go wrong, and then they have school they attended that they never attended on their tax returns. They
Okay.
got businesses on their tax return that they don't know about, and that can get you into problem.
Okay.
Okay,
Okay.
and
Okay.
some of the don'ts,
Yeah.
some of the
Yeah.
don'ts.
Now
Let's
that
say
we are done with the do's now, right? So now the don'ts. Okay.
some of
What
the
are some of the
don'ts.
don'ts? Do not
Um,
do. Absolutely do not do before you fall in
do
trouble.
not do
Yeah.
do not file other people's children without their consent. Please
Okay.
don't file people's children without their consent, because when they go file, it's
Mhm.
going to pop up in the system. One person is
What
going to
if,
get.
okay, let me hold you there though. I said we got a United Nations family arrangement, right? It's like
Mhm.
it's like, you got two parents got a child, right? It's like maybe the child support situation is in there. One person saw the claim it this year, another person saw the claim it the other year. Why if one person is this person, yeah, but man, maybe the father or the mother go and file. What happens in that case?
It's a serious conflict, and I've seen it all the time. I'm even experiencing it right now. I got
Okay.
a client who taxes I did in Atlanta, Georgia. I filed a tax and it came back rejected, right? And they will send you, the IRS will send you the reason why the return was rejected. They got a code. They will tell you the social security number you put for this child has already been filed by another person. They will tell you.
Okay.
So it creates confusion. Now the lady didn't know, and when she asked the guy playing dumb, but the guy already finna getting the refund.
Okay.
The guy already
Okay. So what happened in that situation? Does
they got to sort it
IRS
out. It's
or
not
they
fraud.
have to sort it out between themselves?
They got to sort
IRS
it out.
doesn't
That's
get
not fraud. That's the man's child. And as long as he can provide proof that he spent more on the child the entire year than you, he's required to file a child. So don't file people children without their consent. Another thing, if you have the IP pin, is the identity protection pin.
Yeah.
If you got that IP pin, they change it every year. And it's automatic. They send it to the box, they send it to the account that you use to sign up for it.
Okay.
Every year you have to use a different IP pin. Don't use the same IP pin every year because they send you a new one every year. There's a whole lot of dunks, but for the sake of time,
Yeah. So,
let's
folks,
go.
I mean, let's, what I mean, I said we cannot. It's a 1 hour show, and we are at top of the hour.
Hey,
So
let me
it's like,
just say something. Let me just say
yeah,
something. I'll cut
no,
you off.
we're not done yet. I mean, if you want to say something before I get
Yeah,
to
yeah.
my last
Let me say
question,
something. Let me say something.
yeah, go ahead, go ahead.
Let me say something.
Mhm,
The tax laws is so vast, right?
mhm,
What we are discussing right now is just individual taxes. They got
mhm.
business taxes for people who got businesses. It's a
Yeah.
whole nother discussion, the whole nother Pandora box.
Mhm,
We got
mhm,
business taxes, right? Got
mhm,
individual business taxes and business taxes. You got corporation taxes, right?
mhm,
Got S
mhm.
corporation taxes. They got LLC taxes. There are different rules for all of that. But
Okay.
different discussion, different day.
No, definitely. Yeah. I mean, most of our people, as I said, we are involved in gig economy. I don't know. I mean, maybe like there are some folks doing their thing out there where they have businesses and stuff. Maybe before the tax season ends, maybe we might bring you and another tax expert here, right?
That's
As we
what I
close the
want.
tax season,
So
as we
we
close
can
the
teach
tax
each other.
season,
Yeah,
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 exactly. So,
yeah.
we might as we reach April, before April 15 or a couple of
I'm
days to
always
April
available, my
15.
brother.
Yeah,
Always available.
definitely. We'll bring you guys on here. But what are some common mistakes people make when they are claiming tax credits? What are some of the common mistakes people make when they are claiming tax credits?
We as professionals, we
Hmm.
are required to ask you adequate questions because we get penalized when we get it wrong.
Oh, okay.
You understand?
Hmm.
In fact, there's a form there at the end of the tax return, right?
Hmm.
It's
Hmm.
called the due diligence form. So we ask you, did this child live with you the entire year?
Hmm.
Right? Is the
Hmm.
child a US citizen? Right?
Hmm.
Um, were some of your credits denied last year? We ask you
Okay.
all these things, and then we are supposed to get documentation to prove that you are actually qualified for the credit. We're supposed
Hmm.
to get the child social security, and we're supposed to get a whole lot of documentations. Now, if
Okay.
we get it wrong, we get penalized for it. We pay
Okay.
fees,
Okay.
right? And then
Yeah.
at the end of that particular form, we certify. They ask
Hmm.
you, do you
Hmm.
certify that all of the information pertaining
Hmm.
to these credits are accurate to the best of your knowledge? And we sign it, we say yes.
Okay. Okay.
Okay, so those are some of the problems people face. Some of the problem with the child tax credit is the child is not yours. You
Hmm.
understand? Or you
Okay.
fraudulently got the social security from somebody you found a child because you want more refund.
Okay.
It's a big problem.
Okay. Okay. And folks, man, I mean, this has been a great conversation. As every time on this show, I learn a lot. You know what I mean? So Percival has been really, really educating us tonight, providing some great, great tax tips, tax information. If you haven't filed your taxes yet, man, I encourage you to do so, man. But as you wrap up, right,
Mhm.
what's the message you want to leave with with folks out there, right, who haven't filed their taxes or they have filed their taxes? What's the message you want to leave with them, and what can folks look forward to, right, as we go into 2026? I know it's like a listing of mention, right? There's all these Congress is debating tax laws, new tax laws, and what can folks look forward to as we go into 2026 next year tax season? And what's the message you want to leave with folks tonight? I have been listening to you.
Okay, it's been a great conversation as always.
Mhm,
Inner Cycle has always provided some brilliant. I watch it all the time.
mhm,
But to all the taxpayers who haven't filed their returns, I'll tell you, if you owe some money and you don't want to owe next year, go to your employer and revisit your W-4. Okay, revisit your W-4. Um, Claim zero. That way, they would take up more taxes and you wouldn't owe anything. Or you can go to www.irs.gov
mhm,
slash W4APP. It will provide you the tax withholding estimator. Okay.
mhm,
And then you answer a couple of questions. And
mhm,
then you will get to know if you will pay more taxes next year or you will
mhm.
pay less taxes.
Okay.
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 Stay away. I'll say this. This is a different administration. Stay away from things that are unwholesome when it comes to filing taxes. Okay, this is a
Okay.
different administration. That's an honest advice.
Okay.
Get what you are entitled to, enjoy that one, wait for the next tax season. And the last thing is the tax laws change almost every year.
Mm-hmm.
And it is best, since you are not in the know of all the laws or you don't have the time to do the research, consult a tax professional. There's something they call tax planning. It's very expensive, but some
Okay.
people do it for free. Like for me, I do it for free. You call me any time of the day, say I have this tax question, I will guide you. Consult a
Okay.
tax professional, plan adequately. People's situations varies. People got businesses. People make a lot of money. People their situations change in a year. They marry. They have a kid.
Mm-hmm. Mm-hmm.
Charities, all of that. Consult a tax professional so that they can guide you properly as you enter 2026. Man, but yeah, man.
Yeah.
Overall,
So before you go, right, it's like it's two important question here before you know what I mean. So the last question will come from our listeners, right?
Mhm.
I've already asked my last question, so we'll leave it to our listeners here. Two great ones.
No
But
problem.
how does life changes as marriage or divorce affect a tax situation? Marriage or divorce? Let's start with the marriage. Someone
Marriage is a
single, yeah.
Yeah, marriage is a good thing. Like I said, if you decide to file jointly, you get a lot
Mhm,
of benefits. You get a high deduction.
mhm,
It
mhm,
reduces your income. It helps to give you more refund. And then if you got children, you add to it. It got a
mhm.
lot of credits, and you can add. You can get from. I would tell you plain blank, marriage filing joint is better. Now
So
divorce,
so the tax law then is advantageous to married people.
yes, it is.
That's good.
Period.
That's good.
Right.
So hey
So,
man, if you
mhm.
are single and you're looking to marry, hey, there you go. That's one benefit right there. That's a good benefit.
That's a serious benefit. I will
Yeah,
tell you.
okay.
If
Okay.
you want to, if you want for me to go in detail, I
No,
mean,
no,
get
no,
my
no.
number,
That's
call me.
that's
It's
good. Yeah.
consultancy.
We'll get to the next one and you'll call your number. We'll
So
give you the opportunity
divorce.
to
Let's go to divorce,
yeah,
right?
yeah, yeah, yeah. A
If
divorce
you
one.
divorce, you going back to singlehood. Period. You
Mm,
divorce, your status automatically goes back to singlehood. You're not even going to file married filing separate no more.
okay.
So it's a
Okay.
big disadvantage.
Okay. So
Okay.
last
Yeah.
one here, right? As I said, you have been providing some good information. So we'll let you take your own time and just call your contact number. How can someone contact you to file their taxes, right? Take your own time, call your number. You know, it's like if I want to contact you, do I call 612 or 952 or Atlanta number or whatever it is? So call your number. So our
I
listeners
have
out there,
um
what's your
my
business
business
number?
my
Yeah.
business is an established business.
Okay.
I've been in business for years now. I have my
Hmm.
personal contact, which I like to give
Hmm.
to my clients. You can reach me
Hmm.
anytime. But I also have my business number, and then I have my
Which one do you prefer? The one that is easier to get hold of you. That's the one you should call here tonight.
six. My personal number is 678
Okay.
933
Okay.
6637.
Okay.
Six seven
Again.
eight
Mm-hmm.
933 6637. And then
Okay.
I have the business number.
Okay. What's the
Okay,
business number?
hold
Hmm.
on 1 minute.
You memorize the personal number, but you didn't memorize the business number. You got to memorize both. That
I don't know. The
yeah,
business number is 763. This is the one it
okay.
puts you through a whole lot of bureaucracy when you call.
Okay.
Leave. I mean, if you call for this one, press this one, press that one. It's 763
Mm-hmm.
233
Okay.
3582.
Okay. Well.
76
Mm-hmm. Go ahead. Go ahead.
233
Mm-hmm.
3582. That's the business number. My personal number is 678 933 6637. But then I also have my email address, right?
Okay.
The business email address is VIAGO
Mm-hmm.
tax book 23 at gmail.com.
That's great.
VIAGO tax TAX book BOK 23 at gmail.com. All you have to do is just take a picture of your documents, send it to the email, give me a call, and I'll prepare your returns and give you your result.
Well, folks, with that, that concludes the end of our show tonight. We decided to bring you this very, very important, bringing this important topic, this important conversation, because as I said, man, we are in the middle of the tax season. We are in the middle of the tax season. So we decided to bring an expert on here that, is helping us, educating us. And so folks, that concludes the end of our show tonight. Thank you so much for tuning in.
Thank you,
See you
Amy.
tomorrow.
Thank you so
See you
much.
tomorrow. We have a great topic tomorrow. Tune in, folks. Thank you so much for joining us tonight. It was a great conversation. Thank you, my man. Thank you so much for joining me. I appreciate
Thank
you.
you, brother. No, anytime,
Good night,
anytime.
folks. Yeah.
Circle
Good night, folks.
Podcast, where hearts unite. Share